Hello, everyone. Okay, unfortunately, I won't be able to hold a live Zoom meeting, but I'd like to record this video for you just to review the market performance and then, of course, to highlight any trading opportunity going forward. Okay, so I'm going to start off with the STI, and then we're going to move slowly sector by sector, reviewing those counters that potentially have opportunities. Okay, so let's look at the STI over here. So if you look at STI, after the record months in November where we have actually rocketed 20%, right, we start to see some selling pressure, as especially on this particular day where STI hit the high of 2920, and then ended down lower at this 2869. Right, this is the first sign of selling. As I mentioned last week about the selling. Right, a lot of people was in the euphoria last week where they couldn't believe the STI is going to come down, or they even believe that STI won't come down because STI is so strong. Every day stock market has been going up. They are chasing it every day. So for those who have actually bought earlier, they are actually looking for selling. So when do we sell? We sell first half when we see the first side of selling. This was what I communicated or I mentioned last week. And if selling continues, this is where we're going to look out for the next heavier selling. So yesterday was the heavier selling, as we can see. Right, there were high volume of selling. Now, this high volume can be explained basically not because uh, just because the market was selling down, was because also there were high searching volume on Yangzijiang, one of the component stocks where MSCIs are clearing their positions in Yangzijiang. That's why you recorded high volume, and this helped to pump up the volume in STI as well. So, so if you look at the chart, without just looking at the volume, the candle itself is also quite bearish because STI actually opened up high and then closed lower. Uh, Today we managed to see some rebound from its minor support. This was the previous resistance. Now it's going to turn support, and then it actually closed higher. So with this long black candle selling, so it tells us some bearishness. Of course, it has to follow through by breaking support. Now, with SDI managed to hold at the support, this may help to curb some selling. And if we start to see some upward reversal with candles going more and more into this black candle, means that it's going to absorb this seller, and we may see in the next higher low, then uptrend can continue. But do take note, for many years I have actually observed that the beginning of December is actually not a bullish month. So just to give you example, I just like to clear all the lines over here. So let's start with the um, the 2019. So you can see that in fact 2019 our market was bearish in November, and we had the sell down until we hit the bottom in December 2019. So like I mentioned, it's actually not bullish yet until it slowly goes up all the way back up to the high. Then we experienced some selling in January. This is where we first announced the COVID. So probably this is not the best example that I should show you. But let's look at the year that we had the continuity of so-called prosperity, etc. So you can see here, 2018, right, beginning of December. Well, probably this is going to be a much better example, right? You can see STI actually rally up 6.1%, and then at the beginning, take note of this, beginning of December, we start to see selling all the way until before Christmas. Then the market bottoms up and then prepare for the rally in January. So you can see January we had a rally up all the way 9.5%. Okay, let's look at one more year, probably 2017, and see what happened then. So we see that in 2017, the November period was up as well, and then beginning we had some selling, then some rebound, then eventually we ended lower before the turn of the year. Right before the turn of the year, then January we have a rally up 6.3%. One more year, let's look at the December, the beginning of December. Let's take note over here. You see this is 5th of December. So here this is in fact after 5th, this is 8th of December where we STI peak. After the first week of December, then we start to see some selling, right? Until we bottoms up at Christmas, just after Christmas period. Then in January we rally all the way up, 9% up, and even higher, I believe. So STI actually has gone for the whole 1, 2, 3, 4, 5 months of rally to 14.5%. Now, is history going to repeat itself again? So I do believe that if the market don't actually correct itself, then the upside can be limited. And this is what they usually do. They start to have some selling action, and then bottoms up towards the Christmas period, and then in January we prepare for a strong run. So in this special time where we have COVID and it's still yet to be settled, will this history repeat itself again, or going forward the vaccine hype will still help the market to sustain at the upside and then continue to go up higher? This is a very interesting point that we need to observe. So for the time being, while we are busy, picking up stocks when they are trading back to their low, we still need to be cautious. Probably don't buy everything that you have. Say some bullets, just in case if the market were to start to go down and hit lower and then start to bottom up in December, we still have some to get into those real good stocks with a good setup to trade. So the next few days is going to be crucial. So let's see together. Now, having said that, of course, what are the sectors that are bullish? Now, I'm going to just quickly talk about, I'm going to go through the tech sectors. So remember last week, still remember this rectangle I have drawn, I mentioned that Franken, UMS, Valuetronics, all of them are having the rectangle patterns and all primed for breakout. Franken led the way, is the first to break up higher, and this is a bullish phenomenon. And then of course a bullish sign with the closing higher today. Look at the candle right above the high of 116, and then the volume is pretty strong as well. So we have a good chance to see Franken back to its 1.26 level. Okay, UMS and Valuetronic, they are lagging behind Franken, but nevertheless they still look primed to go up if they can have a follow-through buying. For UMS, we do see that 109 has now become a resistance, and if 109 can break out now, our original target at about 1.17, 1.18 still valid. So meaning to say that if the whole December month is going to be bullish, we do see that the tech sector still have a chance to go higher. Okay, of course, Valuetronics is actually also prime for breakout. The closing today is very encouraging, and then we also have a surge in volume here. So what to look out for next is 61 level to break, and then we can see this counter test resistance at 65, and then eventually if this counter can continue to move up, 685 is going to be the next target. Okay, now last week we talked about the transport sectors. So of course with SDI coming down, most of the transport sectors has also came down. So we have talking about Vicom. So I mentioned about the flag pattern. Unfortunately, the flag pattern don't really comes through. It did not have a high surge in volume buying. So therefore, even if hit the entry price, there's no entry. But I do see signs of potential recovery. The earlier flat pattern has been negated, but now you can see VCOM is actually sitting on its previous resistance over here, turn support, and it has ended as a hammer pattern. The only concern is the volume is not as high, but we can still follow this hammer pattern if the next day can have a white candle confirmation. So if the white candle confirmation comes in, then we would potentially see this counter goes back to a 2.25 or even break out and go higher. So this is actually one of the quite attractive points. Now, if I were to just turn on indicators just to help me a little bit, now you can see that this counter actually had the oversold indication with stochastic, and MACD is actually still pointing up. So this counter still look bullish for the time being. The only downside is the trading volume. The trading volume is pretty low for this counter. So that's the fact, because ComfortDelGro, despite the share split, they still own 80% of Ecom. So that still restrict its trading volume. But nevertheless, for those who are still interested in Ecom, you can still take a look tomorrow. Then we have ComfortDelGro. After it hit the high of 1.81, it start to close lower, and the day. And although there's a fight back the next day, it couldn't sustain the buying and ended up lower again, or rather ended lower again. Looking at ComfortDelGro, the whole, if I were to zoom out the whole chart, it is actually on a bottoming action where you see double bottom action here. It's very similar to Keppel Cup earlier, if you still remember the chart last time when we go through it. If you look at the weekly chart, it still look like a huge two bottom. No doubt there are small bottoms in between, but overall you get the picture. Yeah? So ComfortDelGro, the counter, no doubt is facing some selling pressure, but the selling volume is not particularly high. And if I were to like to trade ComfortDelGro, I think it will be best if it can give me a good setup around these levels at 1.58 to 1.60 levels. This would see that the stochastic will go into the oversold region, and then MACD potentially can start to turn at this point, where if it can turn at that point, that means that there could be some more rebound. So we shall wait for more clarity from ComfortDelGro. Now, we go back to the tech sector. Just now I mentioned three counters. There are still two counters that you may be interested: AEM and Hi-P. So let's just touch on AEM. So AEM, ever since it hit the low at 3.22, it start to rebound, and it is pretty so-called healthy now. It went back to 3.6 level. So this counter seems to be resisted by its 100-day MA, but MACD is still pointing up. It is crossing to the positive region, seemingly pointing for some more upside. But the only thing that I don't like is not just the 100-day MA, but the long upper shadow over here, which tells me there's some selling pressure, uncertainty over there. So I'm going to just keep a close eyes on how AEM will react for the next few days, where it will close then to have a better judgment call. Okay, so for the time being, watch for this 100-day MA clear. Once it clear 3.63 level, then we can see a 3.75 tested again, and then this is where we can have what, triple bottoms, another rectangle patterns going forward. Right? And high P is the strongest so far by far. It has hit high again, right? And with no leg down for the time being, despite some selling yesterday. So there's no way for us to enter this counter now because we will be catching real high. So if high P were to have a sell down, because I do question the formation now, because this is a upward channel which usually signifies a weakening of the upside, and together with the trading volume that is not that high, it may be a sign of weakness. But it has to have a confirmation where the selling must search where below this 1.67 level. So volume should be about 3.8 million. And then this is where we can see some more downward action. So if this happens, then we may see that this counter revisit its gap over here, 1.54 to 1.55 range, where it may give us another opportunity to enter into this counter for those who haven't entered yet. For those who already entered, right, don't be too worried about my comment because it hasn't happened yet. I'm just saying, because this may not be true if there's no selling, right? So just continue to watch for sellers. If selling comes in, take half of your positions, and then ride the remaining trend. Okay. Coming back to the next sector, we have the banking sector. Let's talk about DBS. DBS is, in fact, our banks are still pretty strong. This, no doubt, there was some selling yesterday. The banks managed to close at a decent level where DBS actually formed a hammer pattern over here. And if you were to look at here and here, right? So if there's no December selling, so we do expect a confirmation the next day. So this type of confirmation appearing here again, and then market resume its upwards movement. So where SDS has already or DBS has already gone up more than 20%. So let's see, from here to here, it's about 30% already. So if we continue, its bull run is going to be a phenomenal, where it goes back to its pre-COVID period, where it has hit the high of 26.54 after adjusting all the dividends that you have paid throughout. So will it repeat the same feat, or it should have a slight correction, like I say, pull back 10% or 7-8% before it really embark on the next journey. The OCBC is also very similar. UOB as well, very similar. So let's just talk about OCBC first before we go to UOB again. So we look at this OCBC having a lower price actions, trying to go below $10, but eventually managed to close just 1 cent shy of $10. So what happened now is that if you see OCBC, the pattern is actually not clear. There's some struggle. There are attempts to push it down lower, but buyers are still trying to support OCBC. So it's not really clear where OCBC is going to hit to. So I would say that if OCBC were to continue to go down, I'll just watch. You see, I wouldn't take action yet. For those who would like to keep OCBC for long term, yeah, do buy in tranches. Like for example, 500 share a tranche. Just buy some, averaging along the way down. That will give you a longer run profit, comparing to you buy one shot at one go. Because if there's any correction that happens, you can actually buy some at the low, averaging your price lower. Right. So if you look at this OCBC, if it continue pull back, I do expect it to test 970 range. If it breaks below this 970, this 20-day MA, probably lower. So it depends on how the market is going to go forward this December. So it's going to be tricky. So for many years, the beginning of December has marked the selling before bottoming up to prepare for the new year to come. So will this history repeat itself again? So very similarly to UOB, in fact, UOB pulling back nicely towards support level, like trying to have a setup going forward. As such, we are going to continue to look at the banks, and hopefully they can form a nice chart for us to get into. So, so if DBS gets its confirmation on the hammer over here, then likely you're going to get confirmation from this doji, and OCBC start to rebound, and then UOB can also rebound despite that it's not having any patterns for now. Okay, so just keep a close eyes on it. So don't try to rush into it. Like I say, if you must have the bank, buy in trenches. Okay, as everybody knows that our banks are the strongest. Even if they are down quite badly, long run they're just going to recover, and this has been a fact for many years, and I believe that it's going to be true for many years to come, and therefore it is still one of the safest investment that you can make. Okay, so the banks, in conclusion, we shall keep a close eye on it, and then not to jump right into the banks at a heavy quantity, but some decent size, manageable size, so that you won't miss the future opportunity just in case if the December selling were to really take place. And then let's talk about Changi Airport related sets and SIA. So we have sets. Sets starts to have a selling over here. So this is the first long black candle. So this is where we started another round of selling. So remember I told you that last week we started selling 2,000 share over here, and then sets just bounce up, and with this long white candle and the volume surge, and I do expect it to go higher, and indeed it tried to go higher, but it disappoint me at the end of the day. But hey, this is stock price movement, so shouldn't have any much emotion in it. So just just be steady with it, and then when it tells you that, oh, I'm selling, yeah, this is where we start to throw the next 2,000 share at 421. So I had a discussion with one of my clients, and then managed to exit at that position at 421, and before sets goes lower. So we still hold the last tranche in sets, and then we want to see whether can the trend resume or is going to turn south, further south. So if we go further south, of course the large batch is going to out. If we go to $4, we're going to clear everything and then wait for the next opportunity to enter. Now the positive side of sets is where it actually has the capability to transport the vaccine, right, which is negative 70 degrees. This is still a good prospect for sets, but of course with the stock price has gone up so much, the market may look to adjust itself before the next run. So looking at the indicators currently is telling me that the potential change in trend is likely going to happen, and we are going to watch for support and resistance. So if support and resistance of course is going to be your clue. So if you see support breaks, right, so then this is where we are going to see more downward pressure, and watch for next level of support for the next potential setup. Okay, and SIA similar. So you can see SIA I drew this. I hope that you remember this. I mentioned that this is a flag pattern, and then there was a breakout, strong breakout, and you see SIA charge all the way to 480, and towards 480, I would say, to be more precise, you hit the high of 477, And from there, it forms a long upper shadow and a huge shooting star. Of course, if you look at this shooting star, it's not a, uh, something foreign to you. It also formed one here, but the difference is it did not pull back below the shooting star previously. Now it actually had done it. Okay, the delay of the Hong Kong bubble actually had actually on selling pressure on this SIA, and many would want to buy SIA, as I got question even from my auntie. You know, she's actually really keen in SIA, and then asked me where is the next potential entry point. I would say that um, I would not say that these levels are the real entry point, but just to watch, because is there, if there's any setup around this range 415 to 422 for SIA, then we may see some you know, emails highlighting this, and then tell you that, or telling you that, okay, watch for SIA, potential rebound is coming. And the key here is of course going forward, you know, the COVID-19, if it's if it get controlled, then I mean SIA will get more hype, and then is potentially going to go much higher. So we shall see whether first the vaccine, the development of the vaccine, how it goes, and then more air bubbles is going to translate to more flights, and then SIA is going to benefit from that. So do watch out for that. Okay. And then we are going to look at the medical counters. Last week I talked about, there's a question about the medical counters. Are they gone? Now, I believe Top Gloves are going to announce something, and let me just check. I actually saw something like they are going to have a conference. Um, I want to know exactly. I can't remember exactly when's the date. Okay, oh, they are going to have a conference on the 6th of January 2021. So after Christmas, so then you will know how are they performing, whether what's their outlook, because Top Gloves recently really don't have a lot of good news with them. Their factories has been closed because of COVID infection among their workers, and you know, with the chart topish over here, and the short term, if you look at short term, we still see lower high. It's really not a very good sign going forward for Top Gloves. But hey, it hasn't broke support yet, so we still have chance, where because it may be slipping right now. If a long white candle were to come over, shaking out all the sellers, then it will change the table altogether. But if this long white candle doesn't comes in, volume doesn't surge, we do still maintain you know, negative about this counter, not so bullish yet, because of the lower highs, and if you haven't break support yet, doesn't mean that it's not going to break. So, but then we still got to watch, yeah. So UG Healthcare is also the same weakness after the white candle rebound here. Then we see some low volume selling. So it is kind of you know, this how do I put this, in a more proper way, it's like it buffers me why suddenly there was a surge in buying, and the volume surge up, and then after it sell down. It is simply telling me that, oh, this so-called surge is trying to form a lower high, and trying to tell me that it's bearish. And but yet the selling volume over here is quite low, so it's kind of like 50-50 over here. It doesn't want to give me a clear direction, so I have to wait for the next clear action to come in, which the volume plays a part, the price action plays a part. Now, of course, if you look at the indicators, it's going to give you a mixed picture over here. MACD is going positive, but then stochastic is going down. So what is going to happen here? So the next thing to look out for is a breakout, a true breakout. Then it can tell you that, oh, yeah, I'm going for that direction. So UG is another counter that you know, you probably have to wait and see. Reverse tone consolidating at the low as well. This so far looks like a distribution to me. Okay, because of the you know the the lower high over here. Okay, and then of course now it's trading very near to its support level, the 200-day MA and the 1.27. If it touch that level and breaks below that level, then it confirms my observation. But still, my observation is not confirmed yet. Anything can change, but still, again, there's no setup for it. Okay. Now, MacTech has a different fate compared to all these tech counters. In fact, it had pierced above its 20-day MA, and then it has gone very close its gap. But today, somehow there's some selling pressure. But the good thing is the volume is not high, so not much of a concern. You have to have concern if it start to go below its 20-day MA, below 94 cents, then this is going to be a concern because MacTech may turn back to its bearish way. So keep a close eyes on MacTech. Then next, we are going to talk about the oil and gas sectors, the shippings related. So we are looking at Keppel Corp. Right, Keppel Corp went up, tried to break above, pierce above its 200-day MA, but unfortunately it touched a high of 5.47 and then selling all the way disappointingly to 5.20. The selling continue, as you can see yesterday, long black candles, and then now we are seeing some rebound today, but this is still early stage. Whether the uptrend is going to continue, right? This is a very tricky part. In fact, for analysis, for even to trade, is quite tricky to me. Okay, so on one hand, I can see a potential higher low. On the other hand, you know, the counter has a lot to do. First, to clear its 200-day MA, and then hit the high at 547, then it can continue to go higher. Okay, so next question is, will the merger continue? So if the merger really takes place, where would Keppel Corp goes to? Will it be bullish? Market is bullish about it. Then we look at Sun Marine. It is forming a flag pattern over here, quite promising. And if it can break up 171, it may pierce above its 200 MA. Of course, like Keppel Corp, you got a lot of things to do lah. You need to pierce above its MA. Not say that Keppel Corp is difficult, then Sun Marine is not difficult. But then the thing is, if the good news is going to come back in again, then we may see these two counter breaks above their resistance and then goes much higher. Okay, so we shall see where are they going. For those who like to have a small position, just to have a trade with Sun Marine, watch for high volume buying, break out from this flag. The projection should be around 21 cents or even higher to 23 cents. Okay. Yangzijiang. Wow, look at the weekly chart. Currently it's a hammer, but the week is still young. It's only Tuesday today. We still have 3 days to go. So you may not end up as a hammer. Unless the next 3 days you trade at 92, 915, 92, 915. So the weekly chart will turn out to be a hammer. So yesterday, like I explained earlier with STI, we see there's a heavy selling because MSCI removed Yangzijiang in their, because they're going to rebalance, they want to remove Yangzijiang so that they can put in new counters, better counters, they would think. But it doesn't mean that Yangzijiang is bearish. Why? Because Yangzijiang, after, I think it may be of purpose where they wait for MSCI to clear out the stocks on the last day, then they announce that, oh yeah, I won contracts, shipbuilding contract, new contract, six ships all around there that I'm going to build. And we see that, you know, there is a strong rebound over here today. Okay, so yesterday, although it breaks support, I wasn't of much concern because Yang Zhejiang, actually we know who is doing it. So logically, if you are Yang Zhejiang, what would you do, right? Of course, you won't be pushing up the share price for MSCI to take profit and sell down, right? So what you will do is, okay, you want to sell, I just need to put enough volume to keep my share price decent. And then once you finish selling, then I'm going to, move forward without you. So this happens to SPH when MSCI removed SPH from their list as well. SPH went down to below $1. Okay, so let's just take a quick look on SPH. And we do see heavy selling all the way downtrend. Then out of nowhere, we start to see, wow, high surge in volume, or SPH surge all the way as high as 130. So by the way, SPH is forming a flat pattern as well. So for those who are aiming SPH, if a breakout will do just fine, and then continuous upside. SPH are trying to reform again. Many years they are trying to reform. They're investing more in the digital media. So hopefully they are successful. And then hopefully for those who have been holding SPH has more dividend to collect going forward. So coming back to Yang Zhejiang, well, this is an encouraging sign today. Strong closing, good volume, and the resistance to let's turn off the MA, because sideways for so long, the MA is just clouding your view. Because when the trend is sideways, we don't really use MA. So the next thing is we want to see this counter test 96 cents. Then it actually will also tell us that it is negating all these MA, ignoring them, and then start to move back where it's supposed to be. So if you zoom out on Yang Zhejiang, the chart has been, consolidating for quite some time, and the nice thing to do is to trade back to the upper range of its rectangle patterns, and then move all the way back to 104 and break up from there. Costco shipping, I do heard do heard about this, that one of my client who is in the manufacturing sectors trying to ship out something, but there's no more container, right? So therefore, this could explain why Costco Corp went up here. So when there's no more container for you to do shipping, so what does this mean? It means that the demand for ships, the demand for containers is high, and then this could mean that more business for Costco Corp. And yes, indeed, yesterday I observed Costco Corp and then found that while the whole markets are selling down, Costco Corp is the only counter that is moving up. So I thought that today there might be some bullish action, but unfortunately there are no follow-through buying. But the good sign here is, no doubt it's down, the volume is very low. So maybe the market is taking this chance to shake out all those weak holders, then resume back its upwards movement. No doubt that I find that this chart is nice, but we must still learn from history especially when Costco Corps have a sudden surge, then we do want to see, is there any follow-through buying? Well, the follow-through buying historically seems to be weak from this point and this point. You realize that. So so from having said that, from the chart you would see that it seems like it's a natural patterns for Costco Corp to form. After the surge, they form flag, but after the flag, the follow-through buying has been weak. But still, this time around could be something different, because if the demands of the shipping lines are still keeping up and then moving higher, maybe this flag may be successful this time around. But so got to be careful, yeah. Still got to be careful. Don't over trade. Just a decent size. Keep a $300 risk or $400 risk, and then move forward. Because if this counter doesn't really move, then got to clear out from your portfolio and and start to look at other counters. Lastly, I just want to touch on Sun Power. So Sun Power has been this most very frequently discussed. Starting from the potential breakout over here, then the breakout over here where I have personally traded. Then it actually disappointed me, but I held on because support is still there. It hasn't hit my stop loss. To the point where now it's actually going to my target. This particular candle is just one bit shy of the target. 72 cents is the projected target, and just a little bit more. Yeah. Now today it closed at a very good level, volume okay. So if it can really goes up, I think this time now it may breaks above the 72 and goes beyond. It may even hit 73 and a half. So we shall keep a close eye on this Sun Power, especially I'm having it. Of course, I'll be monitoring it every day. Okay, so with this, yeah, just to conclude, right? Some of the counters that maybe you just want to watch out is where those counters that has so-called flat pattern. We have SPH, we have Sand Marine, we have Sandcorp Marine over here. So and of course, if Sandcorp Marine start to move, watch for Keppel Corp, and yeah, these counters probably in our watch list. So again, watch for December. Watch for the potential selling. If there's any sign of selling, don't be too alarmed. Actually, just be prepared, because if it goes down lower, we can start to buy some good stocks like the banks, etc. Okay, so for the rest of the week, stay safe. I'll see you next week. Okay, goodbye.